Absolutely.
And welcome back, everybody. Happy New Year. Welcome back again to the Empower Hour series, where we strive to go ahead and bring insane value to you, the individual agent and the agency owner, to empower you guys to go ahead and take your personal production and your agency growth to the next level. And that's why I'm certainly excited to have our first guest of 2024 on right now, Mr. Marty Schafer from ETHOS. Marty, thank you so much for joining us. Welcome to the Empower Hour, man.
Yeah, I'm really honored to be here. I can't wait to spend some time with you all this morning.
Yeah, we're excited. I know the team is. Marty, one of our initiatives here at Family First Life, from Sean. Sean's always had incredible, insane goals, right? But one thing's for sure is Sean's always proven that we're going to go ahead and hit these goals time and time and time again. And so our initiative this year is to have 100 million families helped, which means that we're going to be $1 billion company. And one of the ways that we're going to go ahead and do that this year is there's a big push for the SRS team and within the annuity and IUL market. And we're so honored to have Ethos as an incredible core partner in that. And with your new IUL, man, it's going to be like incredible for the agent because it's so simple, right? And it's great for the client, great for the agent. The time on the application is like 15 minutes. Yep. Maybe 20 minutes on your first go around, but it's so simple. A caveman can do it, like I was mentioning to you yesterday. And so we're really excited to go ahead and have you break that down for us. But before we do that, man, we always like to kick it off and find out a little bit more about the person behind the company, so to speak. And so if you would, man, just share with us a little bit about you and your background.
For sure, Shannon. Thanks so much. And good morning, everybody. It's 7 a.m. here. I'm getting ready to move my daughter back into her college dorm. It's not even light out, and I couldn't be happier to be spending time with you all. So, Shannon, my background, I think this is I'm starting my 28th year in the industry. And it's I don't know if anybody, I don't know how many people are new on this call or have been around in this call, but what I would just tell you, the summation of my story in this industry is that it will transform your life. It's transformed my family's like generational wealth. I started out as an agent. Saturday mornings remind me of what it was like in Cleveland, Ohio, with my two kids running around in the conference room and me dialing orphaned Prudential clients trying to sell life insurance. So every time I work on a Saturday morning, I remember those days. But my story is, I grew up in Ohio. Was a college volleyball and soccer player that got drafted to play professional soccer. I did that for a few years. I got injured and then ended up having to become a teacher and a coach, which was awesome. I mean, I loved being a coach, but it was like a vow of poverty, and I ended up starting to sell insurance in the summers to just make ends meet. I called my insurance agent, who was the head football coach at St. Edward's High School in Cleveland, Ohio, and I was teaching theology at an all-girls academy in town, and I was calling for like the 80th time, Shannon, telling him I couldn't afford my premiums and I was going to be late on my payments, and he's like, "You got to get an insurance license, dude." And that's how it started. I started selling insurance in the summers, and the rest is history. I became a fee-based financial planner, got my Series 7 license, was a fee-based planner for about 8 years. Left that and came over to the life insurance industry in 2005, and then ended up founding a company out of that life insurance company called Sabres Partners. I did that for about 10 years. That company was just recently sold to AmeriLife for a couple $100 million. I left Sabres and then went and ran U.S. distribution for John Hancock, which is where I first met Sean. When I first met Sean, Mike, I was the guy who took the John Hancock Simple Term product, which was a direct-to-consumer product, and I gave it to Sean as a distribution product. And so when I met Sean, FFL was a very different company. It's incredible what Family First Life has done since that first time I met Sean. It's just absolutely incredible. And so I left John Hancock, and you know, when I think about coming to Ethos, I had spent the majority of my career, Shannon, helping the wealthy leverage the attributes of life insurance that could help them perpetuate their wealth, which was perfectly fine, but it didn't really serve any real social need, right? It was kind of like taking wealthy people and having dollars and turning them into $20. And so I really wanted to get back to those late 90s years for me, where I was helping widows and orphans, and I was really helping leverage the power of life insurance for the middle American. And that's what drew me to Ethos, was the ability. I grew up with four siblings. My dad was a welder. We didn't have a lot of money. Nobody ever called on our family. If anything would have ever happened to my dad, we would have been in a lot of trouble. And so what Ethos enables an agent to do is to democratize the acquisition of insurance, to be able to send our link to any consumer, and they can do it on their own, or you could help them. And that's what drew me to Ethos. And so that's 28 years of my life. I've been married to my wife that whole time. We have four beautiful women now. They were girls, three grandkids, and I'm more blessed than I deserve.
Man, that's awesome, dude. Thanks for sharing that. You definitely have a servant heart where you love helping people. Where do you think that comes from, right? Where you have this want of, you said you were helping, the businesses, right? But you just had a desire to get back to your roots of helping people. Where do you think that comes from?
My parents, I think family. I think my life calling, really. I don't want to get too deep into that side of it, but look, I think when you get to in your 50s, which I am, which I used to be the young guy in this industry, you really start to take inventory of what life is really about. And you're going to make in this industry. What's amazing about this industry, I mean, I have a degree in theology and I've made millions of dollars. And none of that makes any sense.
Mm-hmm.
It really doesn't. But what I learned as an athlete is if you work really, really hard, incredible things can happen. And if you can overcome adversity, incredible things can happen. So all of those life lessons, Shannon, I wanted to take all of that learning and kind of give back to both the industry and give back to people. And so that I think started with my parents. My parents formed really good values for us as kids, and they challenged us. They gave us a really good foundational faith that I think has led that servant mindset.
Yeah, all great points, man. As a 58-year-old, I get it. I can completely understand what you're talking about there. But the reason why I asked you that, Marty, is anytime that I give you a telephone call, I shoot you a text, any of the staff at Ethos, you guys are Johnny on the spot. If you don't pick up right away, it's like you respond like within the hour. It's incredible. And if you can't, you let me know.
Yeah.
And so I was like, man, it's just top down, kind of like Sean Mike, right? Like great leader. And so I just wanted to, give you props on that. I let everybody know.
Yeah, I appreciate
that
that.
Ethos has got great customer service.
Yeah, I don't know if my wife loves that. We were as the chief distribution officer, I was at dinner last night, and Shoddy called me, Calvin Wright called me, and Zach Twardowski all called me in like 8 minutes. but
That's awesome.
But what our when you're a startup, which Ethos is a startup, I don't know if a lot of people understand that. Like we're a scrappy startup, like a lot of you are.
Mm-hmm.
And you don't win as a startup if you don't do extraordinary. And so, we're not perfect, Shannon, right? There's times when people haven't been gotten back to, but to your point, if you get to me, you will get it done.
Yeah, I just love that, man. Thank you so much, because I am a startup. I'm just 5 years in this. This is my 6th year in business.
Yeah.
And I'm blessed that I'm still here, right? Because the goal in business is to stay in business. So we want to be partnered, everybody, with people that are going to go ahead and, help us help our clients, right? And so I'm really blessed to have you guys on board and be partnered with you. I remember when the Vitality product came out, and it was great. You know,
There
it
might be
was.
might be some interesting news coming around that. I'm not going to get too specific into
Yeah,
that.
yeah,
But
I kind of
Ethan,
got it.
yeah,
But the point was, you know, you were there then. You've evolved to Ethos, and I'm really glad that you did. I truly am. Now, Marty, with respect for your time and everything else,
sure.
we want to get, I want to get to the nuts and the bolts of
Yeah, yeah,
this. IUL. I can, I'm testament to the fact how well Ethos works. When that thing came out, I was like, whoo, I got right on it. My clients love it. It's simple, easy to understand. Everything is right there, on the application itself. I don't want to steal any of your thunder.
no, no,
Um, but we're going to go ahead and let you go ahead and get into the IUL side of things with Ethos, so everybody can kind of, learn more about that, so we can go ahead and help our clients.
for sure. Yeah, and I think the IUL, just in advance of that, I'm going to go through some slides, and I hate PowerPoints, but I'll do it just because I don't want to miss a few things. When you think of the IUL, when we started with Family First Life, I basically went to Sean. We consummated this partnership in our CEO's house. Andrew Taylor, Zach Twardowski, Sean, me, and Peter. And I looked at Sean and I said, we're gonna start with this term portfolio, but I need you to tell me whatever we need to build to become a meaningful partner for you. And the first thing that came out of the group was build an IUL, build an instant IUL. We see that as the future, to your opening comments of where the marketplace is going. And so this is our first version of building that instant, which will always be our MO, building it instant, because we have a proprietary underwriting engine, IUL. And by the way, we're going to keep building more. We're going to have an accumulation IUL. We're going to have, you're going to see a lot of different and incredible things happening as we go into 24. One of which, by the way, is TrueStage will be native next week or in the next few weeks. So those of you who know how TrueStage works on our term product, they get pushed out to TrueStage and then brought back in. That'll all be brought in native in the next few. And that'll all, we're going to have a bunch of amazing announcements, including giving away a car at the convention. But let me get into the PowerPoint.
I'm excited about that.
Yeah, you got a shot at that car, brother.
No.
All right, can everybody see the screen here?
Yes, sir.
All right, cool. So this shows you how technologically ignorant I am. I can't make this. I can turn it into a PowerPoint, but I'll miss seeing you all. So I'm going to leave this like this. The Ethos IUL, what we wanted to create, I hired the guy when we went to build this. I hired Adrian Wan. Adrian Wan was the chief architect to John Hancock's accumulation IUL. John Hancock's accumulation IUL is probably the largest, if not top three accumulation IULs in the United States, 200 to 300 million a year, top five carrier. So we brought the best person in the industry, in my opinion, to come build this product. So Adrian went out and interviewed agents and said, hey, what do you want? We need to create the best user experience for both an agent and for a consumer. And so that was our starting point. He probably talked to, even some of you on this call about, what we needed to do to build this product. So what we ended up spitting out is what you see here today. And then I think it's also important to know, Shannon and team, we're not done. We're going to continue to evolve this product. Like, we didn't have text signature when we started. Text signature is live now. Now, if I was still at a carrier, it would have taken 2 years to get text signature done, or at least 3 quarters. We did that in a few months. So the thing that I want you to remember is this is an incredible product now, but it's going to always continue to improve. So what is it? It's $1 million face, which I think is really important. I think this is the highest, I don't think it's the highest instant IUL death benefit that you have access to. And so that's the first thing I want you to think about when you think about Ethos IUL. The second is we partnered with Emeritus. Emeritus is an incredible Nebraska-based mutual company that has been around, has incredible claims paying experience, and they're an incredible partner of ours. So we wanted to get high death benefit. We wanted to have it with an amazing mutual carrier. So what, when you think of permanent products, you got to think about what's your target market. Like, and specifically when you think of IUL, I'm not going to get into, like, I've been selling and been a part of the IUL market for over 20 years. There are a lot of nuances of how you can design an IUL product. Um, you can have multipliers in the indices. You can do all kinds of sophisticated things that candidly aren't real. They're things that hedge fund managers can't even do, and we expect consumers to be able to understand it at an IUL illustration. We didn't want to be a part of any of that. We wanted to build a very consumer-friendly indexed universal life that you could feel confident is going to perform the way that you position it to a consumer. We also wanted to create a process-driven IUL. Everything about Ethos is about process and democratizing the acquisition experience. What does democratizing the acquisition experience mean? It means making it easier and making it readily available for all consumers and all agents. So the user experience is second to none. So we obviously went out into the marketplace. So if you see this, you can see kind of the Ethos product and a leading competitor. And we wanted to make it full fast. To Shannon's point, it's 15 minutes. We wanted high coverage. We wanted it to be a fully underwritten product, right? And I want to talk about underwriting because one of the things that we observed, we're a tech company, so we ingest data really well. A lot of people, and I don't blame you, by the way, I'm a former agent. A lot of people tested us with bad risks. So somebody got declined at Moo, or somebody got declined somewhere else, and they're like, oh, I'll just try the Ethos engine. And ours didn't work any better either. And they're like, oh, it doesn't underwrite well. Well, it's not that it doesn't underwrite well. We actually underwrite really well. We like the other carrier, don't think it's a good risk. Our underwriting engine is 99% comparable to a fully stacked underwriting experience. So what I want you to think about is use us first, and you'll get a great underwriting experience because we have the most underwriting bandwidth in terms of rating classes versus a Moo or any of these other carrier options that you have. And then the other thing, which I think is nice, is if you do have an unhealthy full decline, we're going to reroute them to True Stage. And we just increased True Stage comp, I think 30 points for Family First Life. So it's not a terrible comp experience either. So you have an alternative solution if somebody gets declined, which I think is pretty nice. So I think that's a really important thing to be thinking about. These are the product availabilities. We've got, issue ages 20 to 65, which I think is important. A million, 20 to 50. Obviously, I just breached the access to a million. But look, you're not going to have many people that are going to get to that $1 million. I mean, if you start writing $1 million of death benefit, that's going to be a really healthy premium, right, Shannon? I mean, that's like tens of thousands a month. But we do have more states that have come on board, but I think the death benefit, the broad issue ranges, the risk classes, and then just the user experience makes it second to none. When you think about the product highlights, Shannon, we have very good indices to choose from. We have this is the second one is probably the most important thing for me. It's why I chose Emeritus. We wanted a mutual carrier that had all the living benefits that our consumers are looking for, and the lifetime income rider. So that those things were super important for us and for me. And it's highly competitive. Like, look, at the end of the day, like you don't want to have a bad instance. So when you think about a leading competitor, and by the way, Jim Duff, who's the new Tess over at Moo, is like a good friend of mine. Like Duff used to run TELUS. Like Jim and I go back 20 years. This is comparing against Moo and Jim's product. It's highly competitive, good cash, premiums competitive, and it's instant. Instead of taking 45 minutes, it's going to take you 15 minutes. So if you're writing IUL, or if you're writing return of premium term, look at this as a comparison. This product will perform better. It'll be faster, to Shannon's point, and it'll be an incredible user experience for you and your consumers. So let's get into how you actually sell it. Hopefully everybody on this call has been in the portal. You all have a portal. That portal costs us about $80 million. It's totally free for you to have access to. And when you go in there, you can just simply click on the either term. By the way, we also have final expense is a third bullet we have now. So you can sell FE alone, you can sell term, or you can sell IUL. This deck is a couple months outdated. But you go in there, you click on the IUL, you'll look here. I can't tell you how incredible this is. This is world class. You can either click a smart solve or you can do an advanced solve. There is no like I said this, I've been selling IUL for 20 plus years. When I used to run an IUL illustration in the mid 2000s, it was quantum physics. I mean, it was literally, you were picking indices, and it was just, GPT, CVAT, like there were all these complexities around what you had to choose, and every one of those decisions mattered. This smart solve is the easiest thing. If you're newer to life insurance, there's no better way to start selling permanent insurance than using our product, because we have literally taken hundreds of years of industry experience and created the right illustration for you. And so all you have to do is hit that smart solve if you want it to be a quick, easy sale. If you want to do, and I don't know if you guys can see this, I'm half blind because I'm old, but this is max cash, max protection, max retirement income. Those are the three advanced solves. So if you have somebody, look, I'm going to be candid with everybody. Ours is primarily a protection design. When you build an IUL, you have to make a decision. You have to say, do I want a protection IUL or do I want an accum IUL? And the reason you have to do that is the actuarial engineering in the products, the reserving factors, the design, how you want to fund the product, how you want to comp the product. There are a million factors that go into it. There is not a product in the United States, and there won't be, that can be the best accumulation IUL and be the best death benefit protection IUL. You kind of have to make a decision tree there. Ours is largely a protection IUL, but it actually does okay on the retirement solves. So I tell people that because you don't want to completely dismiss it, especially if you're newer, and especially if you like the process. So I share that because you should look at those three advanced solves because they're actually not too bad. Shannon, I'll pause there. I've gone on a bit of a long diatribe there for the last 10 minutes.
That's fine. You're on a roll, man.
All right, cool. Any questions so far from anybody, or should I just keep firing?
Hey, Marty, I do have a question, John Mazzella. When you use the word protection, would you say that's compatible to like the guaranteed universal life that Moo used to have?
So GUL, which is a whole other product set, right? So you have like an LE product set. So when I say LE, I mean life expectancy death benefit guarantees. You have the GUL space, which was predominant for probably 10, 15 years. And then you have accumulation IUL. It's going to give you more optionality when you get rid of that, like that death benefit guarantee to 120 costs a lot of money for a carrier, John. Like they have to reserve for that, right? You're literally making like a 70-year bet in a lot of instances. So it's not going to have that death benefit. What you're giving up for that is the accessibility to cash, but it's going to endow, and you're going to be fine. I always look at it like a beta risk. Like it's for the offset and cost increase. It's well worth the risk that a consumer takes on. Just been designed very conservatively.
The point I was trying to make, Marty, is that there's a lot of people in this room that are just starting to get their feet wet with IULs, but a lot of them think it's very, very confusing to sell because there's so many things that you have to know, level, increasing, there's just so much stuff. A product like this, is it safe to say it almost guarantees the person a death benefit till 120, but the cash value?
Yeah, it's gonna design it to do that, John. Absolutely.
So, right. So that's why I say is it.
Yeah.
You could probably compare it to the GUL.
Yes.
Even though GULs don't really exist anymore, but this is the closest thing to a GUL.
Exactly right, and it gives you optionality, right? Like you're gonna have like, to me. Look, return of premium term is a great product because it creates guarantees, right? Moo just exited the 30-year ROP business, right? And the reason they're doing that is the reserving capital requirements for that product is insane. If you think about this versus a return of premium term, if I were a consumer, I would want this. John, the reason I would want this is it gives me optionality during that duration to change or adjust or take my money off the table or do whatever I want and not completely lose out. Now, if I want absolute guarantees and I want forced savings, the return of premiums, incredible product. It is an incredible product for that. But this gives you a boilerplate guaranteed, a permanent product, not fully guaranteed, but guaranteed to LE permanent product, John, that's going to be incredibly easy and simple to sell. The other thing is you look here, John, to your point, when you start doing this, you run the quote here. If you hit this little download illustration, it'll pop up a full illustration for you to show your client. It'll show you exactly how it'll perform. There's nothing like this in the industry. It shows you exactly how it's going to perform. To your point, the guaranteed cash at age 65, it shows you that. The non-guaranteed cash, total coverage, monthly, like everything is right here. And you can just toggle up and down the monthly premium amount, or you can do the coverage amount. Instantly there. I mean, it couldn't be easier for any.
Marty, do they ever have to worry about an IUL, like something like this product blowing up, right?
Well,
I always tell everybody to make sure you at least keep 15-20% cash value in there. This way, the cost of insurance doesn't
for sure
outperform the cash value. So how would you, again, there's a lot of brand new agents in here that are just learning. So to keep it simple.
Yeah. So
how would you verbalize it?
yeah, John, great question. So the question you're asking is how do you set this up for success? We auto solve that for you. That's the answer with ours. Ours is not intended when you do a protection solve. So the smart solve, John, which I would recommend most people use our product for, it's not a bank. Like you shouldn't be going in there and pulling 50 grand to cash out, and like an accumulation IUL is where you're taking in and putting back, like you're pulling like it can operate like a bank. This product that we're going to design on the Smart Solve is going to be designed as in the most efficient manner for that consumer to never have to worry about having to put more money or leave money in there, John. Now, as I always tell people, with a permanent life insurance product, you should be reviewing your performance, which the consumer is going to have their own. They're going to have their own portal. They're going to be getting their own statements. You are going to be getting statements in your portal. Like they should be looking at this thing, but it should be the Smart Solve plug play. They leave it alone, and it's going to perform very, very well. That's what I intended to do.
Yeah, just one more thing, Marty. And again, I hate taking up this much time, but can you just,
don't worry.
A lot of new people in here. Can you just break down what Smart Solve is versus modal premium? And
so if the Smart Solve, when I go back here, so if you look at this slide, everybody, the Smart Solve is you click the button based upon, like if you're meeting with a client and they say, hey, how much money do you have, Shannon, to insure your family for permanent life insurance? I've got $180 a month that I can afford. You toggle this little button right here to $180 and you hit Get Quote Now. Once you hit get, it's going to design the entire policy, John, once you hit that and Get Quote Now. And what will come out of that is this here. So in this example, their monthly premium was $420, and it spit out $300,000 death benefit in the whole illustration. So the Smart Solve is, hey, I've got a client, they want either this much life insurance or they want this much of premium a month that they can afford. And the balloons are now, I don't know why.
That's going on the bloopers.
That's fantastic. How do I make that happen again? But it'll auto design it for you.
It's you holding up the two fingers.
Oh, is it? All right, good.
Yeah.
All right. It looks like somebody had a question. Georgia,
I have a
go
question.
ahead.
Thank you. Marty, you just said something about one of the products or whatever you said was to be your own bank. What was that?
So an accumulation IUL. So when you think of like the F&G or the NLG, like the products that are built primarily to build supplemental retirement income using permanent insurance, that's what I'm referring to.
So
and by the way,
how much do you have to take out in order to, how much do you have to take out each time in order to pull money out?
Very complicated question. We probably should. I could probably talk to you, Georgia, offline. I would spend 25 minutes on that question because that's the
it has to be a number, right?
not that simple. So when you go back here to this, you see this
Because you
advanced
use the
call.
words, you don't want to tell somebody that an IUL, you can use that as a be your own bank, because that's not true.
Yeah,
And that's not true. And that's why I'm asking you how much,
Yeah.
because the reason why I say that is because with most of them, you have to take out a certain amount. And when you're a bank, you don't have to when you go to a bank, you don't have to take a certain amount of money out. So that's
Sure. Yeah, what I was referring to is you can design a permanent life insurance policy to have supplemental retirement capabilities. And that's what I was alluding to, Georgia. So if you go to the advanced solve, you can, when you build a life insurance policy, so I'll spend 30 seconds on it. When you build a policy, you're either trying to buy the most amount of death benefit for the least amount of premium, or you're wanting to put the least amount of death benefit for the most amount of premium. The second one is where you're trying to maximize cash. Like I actually own a max funded IUL from Pacific Life. I've had it for a really long time. I put $15,000 a year and the death benefit's like 200,000. I've got a ton of cash in that, Georgia, that I could pull out tax-free later on in retirement. And I'm trying to spend them. The reason I'm buying the least amount of life insurance is because I'm trying to reduce the COIs that are increasing in the annually increasing term policy that's in that product. So that's a whole different call, but you can do it. You can use life insurance that way, but that's not what our product's designed to do primarily.
Yeah, all of that's great points. And I think the biggest thing, like John was saying, we do have a lot of people that are just getting into index universal life.
Yeah,
and
they
I think
should.
it's important. It's so important to stick to the basics and not get into the weeds. These are the benefits. This is how it can help you. Does that make sense? Yes. Let me go ahead and show you how that can help you. And then you design it. And right beside, if you can go back to that screen where you had the illustration, that little box right there to the right, when you click that, it's going to go ahead and give you an overview of how that's going to perform. Marty, what I do is I take a snapshot, I take a screenshot, I send that to the client, and I explain that to them. And so they see it before I send the illustration, because I don't want to give them any information that they're going to go ahead and shop me. Right.
Yeah.
And then they understand it. I said, is that something that you want to get into? Sure. All right, cool. What's your middle initial? That's the first thing I always say when I'm going to go into an application. Hey, what's your middle initial? Let's get this thing knocked out. In 15 minutes, you're done. But don't overcomplicate it.
Yeah, I think that is a great home base comment. I always say that's like, get us back to like the starting point. In the home base comment, there is this product that we've built is designed to simplify the delivery of permanent life insurance to your clients in the most sophisticated technology platform that's ever existed for permanent life insurance. So you literally, to your point, Shannon, can in 15 minutes show somebody how much permanent insurance they can get, qualify them for that insurance, and get them a policy. I mean, and have access to a free will and trust. That's pretty incredible. And so to your point, Shannon, you simply, for those newer agents, find out, hey, are you interested in permanent life insurance? These are all the benefits of permanent life insurance. Yes. How much money can you afford? You do a little needs analysis, $200 a month, $400 a month. Great. You toggle to there, run the quote. You have the whole illustration here. You hit start application, and you are literally off and running. You can share the quote with the client. You can do an agent assisted. You do an agent assisted application right there. And literally within minutes, to Shannon's point, your client has a policy. Now, there are a couple things that could happen. If the client, I just had this happen last night with Shadi. He was writing an IUL, and the client got referred to underwriting. So there's about a 6 to 7% amount of the populace that come into our underwriting engine where there's just a couple more questions. We're never going to do blood draws. We're never going to do long underwriting, but there could be some questions that our underwriters want to ask the client. And it's better than getting a decline, right? And so it only takes a few days for an RUW, but those are the three things that are going to happen. They're going to get approved. they're going to get declined, it's rerouted to true stage, or there's going to be an RUW. The last thing I would leave with, and I'll kill this PowerPoint, is we've made, and I mentioned this a few minutes ago, we've made a bunch of improvements to our underwriting engine. And so the thing about our technology that I want everybody to remember is one of the biggest values to our company in terms of our IPO value is our underwriting engine. Like it's AI, constantly AI learning. So as we take tens of thousands and hundreds of thousands of consumers through our underwriting engine, it just keeps enhancing the underwriting engine and getting better and more efficient, understanding risk, understanding what happens. And in the few months we've already been live with IUL, we've made enhancements to our underwriting engine that have increased our approval rates 7 to 10% already. And we're going to continue to do that. So I would just encourage everybody, if you're interested in writing permanent life insurance, alternatives to return of premium term, alternatives to the other protection IULs, our product is an incredible product to consider. And so I'll kind of pause there. I don't know if there are, Shannon, other questions, or if that kind of hit the mark.
I'm sure there will be. I think that it's important, though, like for everyone to hit your goals, the benefit with ETHOS is, number one, with any IUL, right? There's two ways that you can go ahead and to help you achieve your goals over last year. One is to increase your AP. Well, guess what? An IUL, it's what, 3 to 5 times higher than what your average AP is, I believe. Marty can get into what their average AP is, but that's just, common knowledge. Increase your AP. IULs will definitely do that. The other is to go ahead and increase your app count. Well, to increase your app count, you're going to need to go buy more leads, or increase your activity. Well, with the advent of a 15-minute application, how many more clients can you protect with ETHOS versus an app that's going to take you 40 to 45 minutes? It's 3 times quicker. So that means you can go ahead and technically increase your app count 3x. Whew, I'm all about that. I'm all about that. Now, Marty, do you have an idea of how much the average AP is?
Yeah, it's right around 2 to 2,500 of commissionable target. Yeah, so it's a nice.
That's awesome.
Yeah, it is.
And the average, I think the average AP is like right around 1,070 something per FFL agent. So that's double. So if you did 200 families last year, boom, you're at Hall of Fame. You're within grasp of reaching Hall of Fame with their product. And that's exactly what I meant yesterday, how ETHOS is going to help you reach your goals this year if we just wrap our heads around it. And to George's point, we want to make sure that we're using the right words with our clients. We never want to go ahead and say anything, that's not true, because Sean Mike has said it. You're not going to become your own bank with these products. Now, there are buzzwords that we can go ahead and use, like you can go ahead and I always let my clients know, Marty, and a little analogy I say is, hey, man, if you've got $20,000 in the bank and you go out there and you take out $15,000, you're only going to earn interest on the $5,000 that's left in the bank, right? And they're like, yeah. Well, with this product, if you have $15,000 or $20,000 worth of value on the cash side, not the accumulation side, then you can borrow that from the death benefit and repay yourself back at a low interest rate, which I do want to get into that if you've got the answer to that, Marty. And you're not penalized on the compound interest side. Does that make sense? They're like, yes. And that's when some people will say, and I'm guilty of it too, I'll be honest with you, you've all heard me say it on the live dial. I'm like, basically, you're kind of like becoming your own bank. But that's something that they understand, right? So those are some of the things that I say, Marty, but we want to go ahead and make sure that we keep it simple for the client to understand.
Sure.
Like Marty has a Series 7. I don't have a license to lose money. I only have a license to protect your money, and that's how we're going to do that with an IUL. Marty, what is the the interest rate on loans?
I don't know what our fixed and variable loan rates are. I just don't know those off the top of my head.
Yeah.
So,
The longer that you have the IUL, do you know if the interest rate gets lower over time?
well, it's typically a wash loan. And so for those, so I'm not trying to dismiss the question, but it becomes a little bit moot, because the way a wash loan works is if you're charging 5 and you credit 5, it's irrelevant what the interest rate is.
Okay, got it.
Yeah.
Okay.
But I think these and I'm a 24 too, Shannon. So I'm actually a registered principal. And so I think George's comments hit me home, because you don't want the SEC or anybody coming after you.
Heck no.
But yeah, I think it's important. Language, words matter, right? And so I think that when you think about our product, which is the course today, ours is a permanent insurance product that you can deliver in a bespoke, custom way that doesn't take you having to design a lot. Like you figure out a premium and a death benefit, one or both. You run the illustration and you can sell the product with great confidence, knowing that sophisticated insurance people have designed that to perform till you die. That's how you want to view our product, in the most efficient process that exists. I mean, our product takes 15 minutes versus almost every other product that's going to take 40 to 45 minutes and/or multiple weeks to do.
Yeah, absolutely. Marty, what do you think are some good buzzwords to use when speaking with a client with your product or an IUL?
Yeah, I think just in general, we've forever been a term company, and part of why we moved into the permanent space is because I'm here as the chief distribution officer. I mean, less than 2% of term insurance policies ever pay a death claim. So the thing I always tell people is which type of policy do you want to have when you die? And people are always like, what do you mean by that? And I say, the one that's in force. That's the answer to the question. So
Exactly.
the one that's in force is the most important policy when you die. And nobody's ever, and I have personally delivered a half a dozen death claims. And it's been a long time since I was in retail, but the power in that moment is unlike anything you'll ever experience, for those of you who are new in this business. I mean, I remember delivering Alice Leach, who her husband was a dentist. He was my first major client. I delivered Alice the death benefit from her husband, and it changed my life, changed the trajectory of my life. So I think what you want to ask people is that, like, the buzzwords are, what do you want your life insurance to do for you? When and what type of life insurance do you want when you die? The one that's in force. And I think the other thing is, like, what when you think about living benefits and all these other things, you just want, I mean, this is all about, Shannon, I'm talking to a bunch of professional salespeople, so I hate giving salespeople advice, because you're better at it than me. I'm the insurance guy, the insurance exec. So you're the real people in the trenches. But I think it's important to know that this is an emotive decision. This is not a logic-based decision for most consumers, right?
Yeah.
And the beauty of what we create in our user experience is you can do all of those emotive discussions, and then when you get to our product, just deliver it. Not, hey, now we got to spend another 45 minutes trying to figure out how angry you're going to get as we try and apply. Like, you do all the selling, and then you just turn to our product and you deliver it in 15 minutes. That's what I think the beauty of our product is.
Yeah, it's a wicked quick, dude. Now, with living benefits, I just have a couple more questions. Living benefits, what's your percentage for critical, chronic, and terminal illness?
In terms of what?
In terms of if you have a chronic illness, what's the percentage of the death benefit that will be paid out?
I should know that, and I don't. I think I want to say it's 80%, but I don't want to answer that.
Sure, that's fine. I appreciate your honesty on that. Like,
yeah,
you don't want to fake the question.
This is why we should have had our account managers on this call.
That's okay. I should have prepared you for that. That's my
That's
fault.
okay.
Accountability. There you go. It's on me, man. Should have
All
let you
good.
know. I should have prepared you for that. Now, the other thing, let's talk a little bit about, we just talked about increasing the amount of applications, right? And one of the ways that we can do that is increase your lead spend. Let's talk a little bit about the Ethos leads, man, because they're awesome. The Vanity card.
Yeah, I mean, so the idea of the leads, I mean, I think it's just such a cool story. So for those of you who aren't familiar, Ethos's genesis was we're a direct to consumer company. We finished 2023, by the way, as the third largest term insurance seller in the industry. So thanks to you, by the way. So we started as a direct to consumer company. We were, Peter and Linky wanted to be Geico on the life insurance side. And we do that really, really well. We're actually the largest direct to consumer seller of term insurance in the United States. But what that also created, which we started looking at early last year, was there are tens of thousands, hundreds of thousands of consumers. I mean, we spend over 7 figures a week on ad spend for our direct to consumer business. And that creates immense leads, right? So direct to consumers come into our funnel. They click on the link, they click on the Ethos ad, they go in there and they're like, hey, I'm interested. Some of them buy and click to buy and they move on and they become clients direct. But tens of thousands of them get approved and they don't do anything. They become latent. And the reason they got approved is like Amazon delivery, the kids are screaming, the dog's barking, they changed their mind, they had questions, they wanted permanent insurance, whatever. They left the funnel. And so we realized that we have a whole team that tries and call them and say, hey, what made you leave? But we're spending money every week, remember? So we can't stay with that one client for like multiple weeks trying to help them, continue to buy insurance. So we took those high intent leads who have put their social security number in, they're ready to buy. And I went to Andrew Taylor and I said, hey, Andrew, would you guys be interested in buying and putting these consumers and offering up to FFL agents in ILC? And he's like, are you kidding me? And so that's how that started. And that's what the Ethos leads are. And so these are high intent consumers who want to buy life insurance. I think it's really important. And I want to mention this because we've had a couple issues with them, is a couple asks I would have. Don't say, hey, yeah, Ethos sucks, you should buy this other product. Like, we really would appreciate you not doing that.
Exactly.
Like a lot of people have done that. That's not been cool. So we would appreciate it if we would not do that. But we also, you're representing us as partners. So we would, it's just really important that you treat that consumer as positively as you can. And I just share those two things because when somebody is coming through that funnel and gets referred to FFL and they have a bad experience, they don't call Sean, they call me.
Yeah.
So I would just ask, just treat those consumers like they are. They're important, critical Americans that need to be insured.
Yeah, that's a great point, Marty. I'm disheartened to hear that. But to that, let's take a look at great question. I'll get to that here in a second. One of the things that, we have a 3-legged approach here at Family First Life. It has to be great for the client, great for the agent, and not harm the company in any way, shape, or form. And our carriers, we wouldn't be here without our carriers. So if we do damage to the carrier, if we shed a bad light on the carrier, that's doing harm for FFL. So I would highly suggest never do that. Now,
it's kind of natural, right? Like, so I don't want to make everybody feel bad, but it's kind of natural. Like, oh yeah, you didn't get approved there, or something bad happened there. Let me show you why I can help you better. So to answer Shannon's question, the way I recommend it is like, hey, we have partnered with Ethos. Mm-hmm. We're their largest distribution partner, and because of that, we help clients who have started the process of acquiring life insurance answer any questions that they may have as to why they either didn't purchase that particular policy or not. And by the way, part of the power of working with me and part of why Ethos wanted to introduce you to me is because I actually have other products in case the product that you were looking at isn't the right product for you.
There you go.
How can I help?
That's
and then
it.
the client's like, oh, that's awesome, right? So it's
Yeah.
like,
I'm so glad to hear you
by the
say
way,
that.
so Phil Polkinghorn, does anybody know who Phil is?
I do not.
He's the CEO at Americo. He and I worked. He and I worked at Phoenix Life together. So he was my boss at Phoenix Home Life, and now he's at Americo. And when I saw Phil at convention, I looked at him and I said, "Hey man, I'm getting ready to increase your sales. You should start sending me a commission check." And he's like, "Why is that?" I said, "Because a ton of these leads that I'm turning into FFL agents are going to turn into Americo size." And they have. And by the way, we're totally fine with that because Americans are getting insured.
Yeah, and that's a great point, man. The bottom line is we're here to serve our clients, right? And at the end of the day, we all win, right?
Exactly.
And I'm so glad to hear your approach on the leads, because it's very similar to mine. And someone had asked what my approach is, and it's very similar to Marty's. I just call up and I'm like, "Hey, Marty, this is Shannon Womble. I'm actually getting back to you on behalf of Ethos. You were recently filling out an application for life insurance. And for whatever reason, Marty, the application was left in the cart, and we wanted to go ahead and reach out to you to go ahead and see how we can assist you with that process. How can I help, man? Tell me what's going on." And one of the things that I will say is you actually, have more options dealing direct with me since Ethos has asked me to go ahead and reach out to you. And from it, like it's a high intent lead, people know.
Yeah.
This is why I love those leads so much because number one, we're always talking about time, right? Time is our most valuable commodity as salespeople, right? And the less time I have to spend overcoming an objection, like I didn't fill that out, whatever the case, right? It's time saver. Ethos is all about saving us time. Yeah. And that's why I love your leads so much, man.
Yeah.
So with that, I know that we're approaching the top of the hour here. We've got time for one, maybe two more questions for Marty, and we're going to go ahead and cut them loose. And so who has specific products to the IU or specific questions to the Ethos IUL? Go ahead and unmute. Don't be shy. Now's your time.
Yes, the Browns are going to win the Super Bowl, in case anybody's asking that. Yes.
Well, that's going to be a tough one, bro. It might come down to the Browns and Baltimore. That would be pretty good. That would be epic, as a matter of fact. Any questions?
You made a lot of sense up until you made that comment, sir.
Hey, I just wanted to make sure, John, everybody was still awake. I got my Jim Brown autographed helmet behind me. Like, I'm a Brownies. It's football season, baby.
Marty, I love you, bro.
Mark, I don't have those written down, but this is recorded. So, those scripts that Marty and I were just talking about are going to be, recorded, and it's going to be on the YouTube channel as well for everybody's reference. Marty, thank you so much, man.
Of course.
I appreciate the hell out of you guys. I truly
same.
do. And I really look forward to crushing it with Ethos in 2024 and look forward to winning that car from you guys at convention. Thank you so much for that.
Yeah. Hey, Shannon, thank you all. By the way, you're going to see our car outside of convention. It'll be there all week. Sean's going to drive it up. Hopefully he does a donut or something and then gives it away. But that's the type of innovative stuff we're going to continue to do. And the last thing I would close with on my side is we are going to have a whole team at convention again. Myself, our entire support team. Please come up and say hi to us, introduce yourself. I really want, to Shannon's point, when we get to know you, we will help you, and we'll do anything we can to earn your business. And I just want to thank you all for helping us meet and drive towards our mission of ensuring the next million Americans. That's what we're here for.
I love it, man. Look forward to meeting you or seeing you at conference or convention rather. And by the way, the carrier meet and greet is on Wednesday evening. right? So of course they're there throughout the entire convention, but Wednesday night is the carrier meet and greet. Looking forward to it. Marty, thank you so much for saying yes on such short notice. You're the man. Thank you so
Anytime,
much.
brother.
Everybody, thanks a lot for taking the time to hone in on your craft on Saturday mornings. You guys are the ones that are going to crush your goals in 2024. And let's go crush it today. Again, Marty, thank you so much.
Thanks, Marty.
Marty. We want balloons.
Thank you.
Yeah, I want
More
balloons.
balloons. More balloons.
Thanks, Marty.
It didn't work
Yeah.
that time.